Hello fellow traders, welcome to your favorite channel, Top Master Trader, where your journey to market mastery begins. Today I want to talk about Fibonacci Expansion, Fibonacci Extension and Fibonacci Retracement. What's the difference? Why there are all these tools? How to use them? What they are used for? How professionals go about them? I will tell you everything there is to know. First of all, I'm using the XTB platform. So XStation, it's a professional platform which I highly recommend for you to use as well to get all the tools. I will leave the link below in the description so you can open a demo account and start using it straight away. Or you can open a live account if you want to fund it. Then if you open live account, I have a special gift for you, a full course that I have almost 30 videos on my website. You will get free access once you activate live account with XTB. So that's the platform I'm using, and that's where I can find all the tools. On the left hand side on a toolbar, we can see there is a Fibonacci Retracement and Fibonacci Expansion. But where is Fibonacci Extension? I will explain that to you in a second. So let's see. Fibonacci, it's very sticky. Fibonacci Retracement measures potential point of retracement. So where we could open a position to start a new movement. Fibonacci Extension helps us to define the point where we can take profits or where the market could reverse. And Fibonacci Expansion is used to do actually both things. So you need to know how to use it, and you can calculate the point to open the position or where to close your position. So it's all very useful and all very confusing. So I will give you a proper guide in this video. Let's start with Fibonacci Retracement, which I think is the most popular. Everyone wants to know where to take the position, where to start their trades. And for that, of course, it's very easy. We just use the Fibonacci Retracement tool. And now, how do we apply it? So imagine we have only point A and B. And at this point, this red line is a resistance of the market. So we came to the conclusion that, okay, there was a beautiful move, but now there is a resistance. So the market might have a pullback before it will break through the resistance. And we want to know where this pullback potentially could finish. And to do that, we can use Fibonacci Retracement. Now we are clicking on point A and then point B. In this way, we've got this beautiful net which shows us 0.100% and 0.0. There is 23.6, 38.2, 50. 50 is not Fibonacci number, but we use it because the market loves to bounce off 50%. You know, when you are shopping, you can see very often 50% off. That's where the women jump in and spend money. So 50 is a psychological number, 50% off of the beautiful movement. So we have it as well as part of the business, but it's not technically Fibonacci level. Then there is 61.8, 78.6, and you could add a couple of more levels here, but that would be very overcrowded. So for now, we just stick to these levels. If you want to set it, you can double click and then you can change, of course, the line type. You can change thickness of the line. You can change color. We can do show ray. Now all of that is going all the way to the left hand side, to the right hand side, sorry. So we can switch off this ray, show the price. That could be very useful. So if we press on that, we can apply, and now we can see not only the level, but as well the price correlating to the level. So it's 35,337. So it's very easy thanks to that. So we don't need to wonder what's the level or like check it to the right. We can just read it directly from Fibonacci. It's very useful, especially if you want to open a buy limit order on this level. You want to set the order. If you don't know what buy limit order is, I'm teaching that as well in the course. So get the access to the course. And here we are. So I love to have this the prices on the side. Now we have the levels. We can add or remove certain levels. So for example, if we're not interested in 23.6, we can remove it. If we ever remove something and we made a mistake, we can go to restore to defaults, and everything will be restored back to default, as the name suggests. Visibility, when you draw it here on, let's say, 5-minute chart, you don't want it to have these lines visible on daily, then you can select it that this is only to be seen on 5 and 1 minute chart. That's how it works. And the basics, of course, you can change the line. For example, let's do it this way and make it on. Now we have a nice dotted or lined line. Can be a little bit more original than the others people charts. And now back to the levels. So we have 38.2, 50, 61, 78. 38.2 is very strong level for a very strong bullish market or bearish market, because this can be drawn in both ways. I will be just going through bullish examples here, so you can just reverse it later on. With the bearish market, the impulse would be going down and the correction would be going up. So in case of drawing it from bottom to top, you will be drawing from top to bottom, but still point A, B, C. So 32.8, I made a special video, I think like 2 years ago already, on my channel about gold and its special number. Go and watch it and you will see how powerful this number can be and how much money it can bring you. Then we have 50, this is 50%, and 61.8. That's like proper Fibonacci number, one of the most important numbers, and that's where markets would usually reverse. But there is, of course, much more to that than just this bear market. So what you want to do at this level, obviously, you want to not just open the position straight away, although that could be your strategy, and feel free to do that if you feel like, but you would be looking for certain type of confirmation. So for example, if you have a green candles that they were going all the way up, so that was your market, there were beautiful green candles which now reversed and became a red candles. So if we go to settings, we just change the color to red, and now you can see that okay, we are in the bearish market. We have red candles here. We can make them a little bit smaller, and the market arrived to our level. And now you see that the market is creating certain formation. So for example, the last, maybe let's do it differently. Let's give a little bit more of candles here. So we have some red candles going down, and now you can see there is a beautiful engulfing candle, for example, green candle. So your expectation is that this level works very well. You have some candle formation, and this candle formation might hold the market. So you will have a valid stop loss under the formation, and then you can trade up. And now, let's say that was your level. The market came to 38.2, and you are trading, and the market keeps going up. Is going up. Is going up nicely. You are in a beautiful profit. But now you are thinking, okay, I need to take my profits somewhere. Where do I take my profits? Extension, Fibonacci extension and Fibonacci expansions to the rescue. That's where you will use the new tool. So your market is growing. You are super happy. Fibonacci showed you where to take the trade. Now you want to know where you take the profit. So we're using the Fibonacci still Fibonacci retracement for Fibonacci extension. But instead of calculating A, B, we are calculating from B to A. And from B to A, now we will get the extension of the market. So there is another level, which is 161.6. And there are another levels a little bit above. So let me shrink it for you to see, which are 261.8, 423.6. These are like the most popular levels. And for now, we are extending the initial impulse. And we can see that the market came to the point D, might come to the point D. In this case, it came to the point D. So we can target our movement until 161.8. So that's why we have the extension. So we know where the market might extend. If we see later on that the market broke through 161.8, we might want to try to hold the position until 261.8. So that's the whole concept behind these numbers. So now, what is the Fibonacci expansion? Fibonacci expansion is another way of measuring. So we go to, again, Fibonacci tools, and we have a special tool called Fibonacci expansion. And now, instead of measuring just A, B, we do something extra. So we measure A, B, and C. So in this way, we have another kind of calculation, which is happening not from the point B, but from point C. So previously, we were calculating extension from point B, and 161.8 we are getting over here. But now, what we do, we are calculating extensions based on point C. To make it more clear, if we take our previous tool, and we can see that this is the level 61.8 is over here. Now you will take this this tool and you lay it from here, and you can see you should actually do the reversal to see it better. So let's do the reversal of that one like that. So that's our measurement. And now laying that down from C, you can see that this is 61.8 of AB. So that's where you have 61.8. Let me just remove it. This is 61.8 of this of 8B. So that's how much the market extended from point C, and that's 100%. So if we were to take this line and put it from point C, these lines will be equal. So that's your measurement. So you have 100% and the 61.8. And of course, there is as well 161.8 of AB from C. So that's the difference. But you can use it as well in another way. So this is not the only way of using Fibonacci expansion, which not a lot of people know about. On YouTube, professionals know about that. But YouTube is for YouTubers, and they just talk what they want to talk about. But I will tell you everything there is to know. So we have Fibonacci expansion again, and now what do we do? Instead of AB, ABC, we do another thing. We do B, C, and then D. And what do we get now? You might be thinking, yeah, but how do I know? I'm trying to calculate D, so I don't know where the D will be. And you are completely right, because that's not what we are calculating with this measurement. With this measurement, we are not trying to find the top, where to take profits, but we are calculating what we were calculating before with Fibonacci retracement. So you remember that Fibonacci retracement was showing us points of potential retracement. And now we are doing the same. So we are measuring BC from D, and now we are hoping that the market will be after certain fall. So let's say we have some red candles. The market is going down, and we want to see how far it can get, and it might get to one of these levels, of course. So let's say it came to 100%, and then we again we get our bullish engulfing, or whatever candles formation you want over there. There might be like a couple of small candles, yeah, and you can see that something is happening. So that's how you use Fibonacci expansion, in two different ways. One, to calculate the potential target to take your profit, and one, to calculate potential retracement, where the price can start going up again. So that's how you do it, and this is all quite simple, and it's still quite basic explanation. We could go much deeper into this topic. So let me know in the comments if you would like to know much more about these expansions, extensions, and I can make more videos on that in the future. And for now, I invite you to practice, to install the platform, to practice the levels, drawing them, practice them on the market, on the real market, practice them just like I'm doing right here. So the market is actually, the real market is all the way here above. I just moved the platform, and then you've got the blank page, and you can draw nicely without all the chaos, all the movement happening on the market right now. And if you want to, if you already are expert in what I'm teaching here, then I invite you to expand your knowledge by taking one of my paid courses and take your knowledge to the next level. Some of them, they are available for free, and all the information is on my website, of course, topmastertrader.com. YouTube decided that there are some other cool videos on my channel, so they will be on a site here for you to explore. Enjoy them, and until the next time, bye. The markets never stop, and neither should you, so watch one of these videos next.